So again, we are there to help. One more thing before I get done. One of the things that Joe Green has, and I love this, is the 3 phases of going green: repair, reduce, renew. Well, if you want to repair, which will lead you to reduce, most people are going to need a loan, because most people don't have the $40,000, $50,000, $60,000, $70,000, even $10,000 just to throw into a project. And that's where banks and credit unions do come in. So that's my little presentation. I do have, if you do want to see rates, they're in the back. You guys can grab that on the way. My card is there. Again, Patty is here to answer any questions. If you have any questions for me, you can either ask them now or I can wait till afterwards, and I'm going to turn the floor over to probably the most important person here, which is Chris.
I think we had a question.
The equity, home equity line or HELOC or whichever program it is.
Right.
Do you have like an application fee for somebody coming on or beginning a search that's not a credit union member?
I don't really understand the question. Be a little bit more specific.
I have a client. They're
Yeah.
looking to borrow $15,000
Right.
to do whatever.
Okay.
And I recommend them to Seaport.
Right.
Would they have to pay an application
No.
fee?
No, I will tell you, with this program, $25,000 minimum.
Okay.
That's the minimum of the program. It's the only way we can afford to make the money. We can't have the $20,000 line sitting there at 2.5% doing nothing. Other than that, the only fee they may pay is an appraisal fee, and we won't know until they apply.
Yep.
That's it. With us, and am I correct with that, Patty? Yeah. Other than that, no. They walk in, they fill out an application, they meet with, could be with Patty, could be one of the other lenders. If they haven't done anything to their home, let's say in 5, 6, 7, 8, 9 years, yeah, we'll probably have to run an appraisal. I mean, that's just, again, safety and security. It's not a lot of money. It's a couple $100, $400. Do you know off the top of your head? Yeah, it's no more than $400. But even then, sometimes we don't do that, and then there's no fees at all. The only thing we do it is a minimum of $25K. And as you go around and you look at some of the programs, everybody has a minimum in there. Again, it's just the safety for us more than anything else.
So the first time borrow amount needs to be $25,000 or greater.
Right, it can be higher, but
Yeah.
the distribution must be $25,000
Understood.
to start with. Anything else? Just lastly, I really appreciate you guys from Joe Green letting us do this. I'm lucky enough to serve in the St. Louis Chamber of Commerce and was here the day that they joined, and it's a great company, and I know for myself, I live in Swansea, we're actually going to use them to do an audit to our house, which I already know we need windows in the absolute worst way. So, have your clients visit them, and again, if we can do anything, please reach out to either myself or Patty or anyone at the credit union. Thanks for your time. Enjoy the day.
Let me switch to the mics.
Oh, sure.
And thank you for that shameless plug there. We didn't pay Glenn to do that extra. All right. Is this on?
Yeah.
Can everybody hear me okay? I think I've got a loud enough voice where it shouldn't be too much of an issue. All right, on to the fun stuff. We've heard about all the financing and stuff that we can't do. At least we could talk about some of the rebates and programs that are out there right now that are possible through many different functions. Some of them federal, some of them state, some of them through the utility programs. We're going to run through a brief overview of all these. I just wanted to follow up with some of these points that were on the end of this slide here. They were talking about 20 and 30% energy costs, or that's really energy savings there with home improvements. That's not outside of the realm. That's what we normally see. If someone's doing all the programs that we recommend, they will see at least 20 and 30%, if not more, depending on the house. So that's not a pipe dream type thing. It's a reality. We've seen it and verified it multiple times. We'll talk about some of these other programs like LEED status. It's more of a commercial program, really. There is a LEED for Homes program, but if you want more detailed information on things like the LEED program, the HERS rating, what that means and everything, just give us a call later on. It's not really what we're going to cover here per se, but we'll be happy to sit down with you and just discuss it in more detail about what those things mean, because these are pretty detailed discussions and everything on those things. So I like this little blurb down here. Average U.S. home lost 2.7% of its value in '07, while the eco-friendly homes have held their value. That's probably more of what I was talking about in terms of being able to move your product in terms of the brokers out here. So it's and like we were saying, the demand for these are rising. You know, if you have a house that's, you know, been, you know, weatherized, for instance, you know, it doesn't even have to have a HERS rating. It's just had some sort of energy improvements on it. It's going to be more attractive to someone looking for a house than one that doesn't. So, but we're here to talk about some of the rebates and tax incentives. Now, a few disclaimers. We're energy auditors, not CPAs, so we're not giving you official tax advice. We have to say that. You know, we don't dole out official tax advice. You have to talk to your CPA, blah, 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 you know, so on and so forth. So we can't officially give you advice on taxes, but we're going to show you the programs as they're shown. So these rebates are constantly changing. So if you or your clients are planning a project, you have to make sure that the rebates you thought were there will still be there at the end of that project. It's very important because it's shifting underneath you constantly. So the best thing to do is work with someone to make sure that those programs are in place. Because you don't want any unpleasant surprises, you know, where you expected to get half your money back and you didn't at the end of the project. That's not a good way to do it. So, and on that also, there are a lot of stipulations with these programs. There's a lot of special case scenarios, you know, oh, my house is like this, it's, you know, it's in a different category, so on and so forth. So every house is pretty unique when it comes to these programs. You know, you may be qualified for a furnace program because of X, but you don't qualify for the insulation program because of Y. You know, and there's many different reasons in and out from that. So it's important to, you know, if you have a question, you know, does my house qualify for this? Give us a call. We're happy to just work with you and tell you, you know, what that specific improvement would qualify for, because each house is unique. So, all right, I'm just going to run through some of the programs here. Like I said, there's many more out there, many more special cases. So, but these are some of the more popular ones. This one's the Residential Renewable Energy Income Tax Credit. That's a mouthful there. This is a state tax credit. This is a, you know, when you're filing your taxes in April or whenever, you get this straight up. You know, it's a tax credit of 15% or $1,000 on basically any renewable energy program. That's what this is for. So you just have to be in the state, and it can also be carried forward up to 3 years. That's important. So if you aren't paying this year, but you may pay next year, you can actually carry it over into the next year. Take that tax deduction there. So. All right, next one is the Renewable Energy Property Tax Exemption. I put this one up here because it's just a little known fact. It's not that big of a deal, I guess, in terms of overall tax things. It can definitely be a big deal when you get into larger commercial products. But this just says that if you're putting a solar panel on your house, that obviously adds value to the house itself. But your local real estate, or not real estate, but your local property tax people can't tax that as additional value added to the house. It's exempt for 20 years. So it's exempt for a very, very long time. So, and that's for solar hot water, solar PV, wind, or if anyone has a hydroelectric system in their house. If you have a giant waterfall and you're trying to spend electricity, sure. You don't have any value added on that. So. All right, renewable energy equipment sales tax exemption. This just says that if you're buying extra equipment for your ground source heat pump, your solar PV, or anything like that, you don't have to charge any sales tax, or you don't have to pay any sales tax on that. So it's just a small little thing that says, you know, that it's a continuing process. It's really a more of a tax program. All right, now these are some of the bigger processes that we have here, some of the bigger programs. This is the Mass Major Renovations Program. And you can see, this is 75% of an envelope upgrade. So this is a significant upgrade. And this doesn't apply to, you may actually see more on top of this, because this is not the utility program. This